Important remarks, Kelly, from Philip Jefferson. He is the nominee to be the vice chair of the Federal Reserve. And he is talking about skipping a rate hike. He says skipping a rate hike at a coming meeting would allow the committee to see more data. A decision to hold, however, he warns, does not mean the Fed has reached the peak rate. So it seems to me that he is setting up here essentially what people are calling a hawkish pause, one where the Fed stops but reserves the right to come back and hike again. He says a year is just not long enough for the economy to feel the full effects of higher rate hikes. So he's concerned about the lagged effects of the 500 basis points the Federal Reserve has raised. Higher interest rates, he worries, could worsen the stress at the banks. He expects growth to slow this year due to tighter financial conditions, low consumer sentiment, heightened uncertainty, and a decline in savings from the pandemic. He does say inflation has come down substantially, but remains too high. But he expects tighter credit standards to impact the economy, though the impact, he says, is uncertain. He's not expecting a recession, he says, but he's concerned that if you raise rates too high, together with lower earnings, it could test the ability of businesses to service their debt. Finally, one of the things is weakness in commercial real estate is going to put some strains on some lenders. A little bit of context here, Kelly. A confirmed vice chair for the Federal Reserve Board would be somebody who is typically, call it a pulling guard for the chair. They may come out and throw out ideas ahead of the chair. Certainly, you would not expect there to be much daylight in the outlook for policy between the chair and the vice chair. Phil Jefferson is still the nominee, so we don't know if that's the case yet. But the idea of skipping a meeting is something that you could have inferred from comments that Fed Chair Jay Powell gave a week ago. However, his committee has sounded a lot more hawkish, or certainly the members of the committee who have spoken have sounded more hawkish and talked more about a rate hike. So here we are right now with, you got the chair, I would say, and the vice chair talking about the possibility of skipping a meeting, but members of the committee. So there does seem to be a split. However, the leadership, Phil Jefferson, using the term skipping a meeting.
That is
and let me tell you one other thing, Kelly. Yeah, one other thing here, which is that going into this speech, the probability of a June rate hike was 68%. It's now 53%. So that's come down. Sorry, it's now 48%. It is moving as we speak here. And I don't know if that's also moving the short end of the bond market, but certainly the probability of a rate hike. And I'll tell you what's happened here. We've gone from a 525 to 522. So they're baking out much more 50-50 now on that June rate hike.